The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We have a Fed decision tomorrow, but this morning we got retail sales, and it is a strong number. Pretty interesting. You come into the discussion whether they're going to cut by 50 or 25 tomorrow, and meanwhile, we got retail sales growing, beating expectations. Very tough, very difficult to argue that rates need to be at 50%, 50 basis points higher when you talk about the economic landscape that we are currently in right now. We take a look at the markets, green across the board. S&P is up 25 right now, 57.25, and you take a look at the daily. Folks, that's an all-time high in the futures. Now remember, we just got a little bit of a boost because you got a rollover. Futures are generally a little bit higher. You got S&P cash right now at 57. No, excuse me, that's not. Yeah, these are futures, 57.26 right now. And we had the S&P close yesterday at 56.33. Futures are always going to be a little bit higher because of the anticipation that over the long haul markets do go up on average. So if you got a future into the future, nonetheless, you got S&Ps. That's a high print, 57.25. NASDAQ 100. Not quite at the highs, 19,806. We're up by 0.75% though, up by 142 points. Dow up by a similar 140 points. Dow right now, you talk about the Dow too. Dow on a cash basis, 41,622. We're less than 20% away from Dow 50,000. Where's that hat, right? Get that hat ready for the Amazon store. Russell 2000 right now, up by 15 points or 0.7%. Bitcoin catches a bid. We'll put it back to a 5-minute chart. Up $1,500 at 59,540. Crude chopping around $70. I got gas yesterday. What was the real price? I don't want to lie to you. I don't want to mistake it. I'm not going to lie, but I don't want to get confused. What was the price? I took a picture. Did I take a picture? I hope I did, so I didn't forget. Oh, I don't think I did. What a bummer. It's either 283 or 287 at Sam's, folks. 283 or 287. I can't remember which one it was. For regular 87 unleaded gas. 283 or 287. Remember yesterday I was having the conversation that a price of a $20 bottle of soda at checkout is $2.59. Those two don't make sense. One has to go one way or the other, and I don't think prices are coming down at Publix. Therefore, not saying that crude's going to skyrocket, but at these prices, a gallon of fuel costing the same as a $20 20-ounce bottle of soda at checkout doesn't quite compute. When you look where we are on this chart, it would make sense. We're at a technical low. We're trading at 70.30. Crude up 21 cents right now. You jump over to gold. Back to a short-term time frame. Gold yesterday up to 26.17, all-time highs. We're trading right now negative by $4 at 26.04, and you jump to notes and bonds one day before the Fed. And what'd you get on that 8:30 number? Let's put it back to a 5-minute. Let's put it to a 1-minute so you can really see the reaction around that 8:30. There's your 8:30 reaction. And what do? You dip lower, which points to higher yield, and it would make sense, right? The whole conversation right now is that are we going 20 or are we going 50? How fast are we going? And you got to look at retail sales to see that number, but we're talking about a 10-year right now at 3.62. It just keeps going up. Higher price, lower yield. Yes, we've pulled back by 2 ticks today, but boy, we're talking about almost 3.5% on the 10-year. 3.62 right now. 3.62. The Fed. They got expectations sky high for what they're going to do tomorrow at 2 p.m. Eastern Time. But we got a day and a half to go of trading, and we kick it off with retail sales. Surprise gain helped by online stores is the headline there. The value of retail sales, unadjusted for inflation, increased 0.1% after a revised 1.1% gain in July. I mean, look at these numbers. Do we really? The Fed has to come in with a 50 basis point cut when retail sales were up 1.1% in July, up 0.1% this month. You look at the numbers versus the expectations. Pretty interesting in terms of the estimate was a decline. We come in with a positive. If you take out autos and gas, month over month, slightly under the estimate, 0.2 versus 0.3. The control group, right in line. 5 of the reports, 13 categories posted increases, while others such as electronics and appliances, clothing, and furniture fell. Okay, so get that: electronics, appliances, clothing, furniture on the negative there. Receipts at gas service decreased, not surprising there. And the control group was up 0.3%. That group excludes food services, auto dealers, building materials, and gas. Always interesting how they have the combo here, right? The control group, again, to look at it, excludes food services, auto dealers, building materials, and gas stations. Nonetheless, very easy to make the case that it's time for them to begin cutting. Very difficult to make the case that they have to cut rapidly here, because there are going to be impacts when they begin to cut and they come down the line. They bring down rates. People have access to capital, cheaper loans. They can refinance their homes. They can buy a new car with a 0% down payment, which is out there sometimes. But right now, car payments, yes, they'll give you a 0% loan, or they'll give you $2,000 back at purchase, right? Because they're having to pay for that loan if they're giving you 0% when the market is yielding a positive yield. So there's going to be influences, and what is housing going to do alone? These are the conversations I'm having right now, and they're bigger, broader, longer-term conversations. But if the Fed really has 6 cuts in the next 9 months, okay, even 6 months, I mean, the market almost thinks the Fed could have 6 cuts by the end of the year, okay? But let's just say that's 1.5%. I mean, you start getting down to where you're in the 5% mortgage rate, something like that. Boy, there is going to be, number one, you could see housing prices increase. You could. It's not an automatic, man. There is going to be a supply factor here where people are going to say, you know what? People are coming in to buy homes now. I'm going to sell my home because I wasn't going to do it prior. We didn't have enough buyers. Maybe I was waiting for that. Even just the refinance, right? We'll see how it happens. Nonetheless, we get a Fed decision tomorrow. We get strong retail sales that beat expectations this morning coming into that number. And we have the 10-year yield sitting at 3.62%. That's quite a number, man. Especially when you talk about we're down from 5. And that's the other thing to consider, okay? We are down from 5%. This move that has taken place in the 10-year, where we have traded from 107 to 115, okay? The capital appreciation this year alone, right? You want no volatility if you buy fixed income? Well, if you bought the 10-year, folks, you just made almost 7% in, 5 months, 4 months, something like that. Well, you know why you made that? Because it's already priced in that yields are going down by 1% to 1.25%. So that's the other side on that mortgage debate, right? You get a Fed cut here, those rates are baked in. The market's first, the Fed is second right now, as long as they're on the same path. What is intriguing is the Fed going to push back a bit? They haven't pushed back yet. We're seeing articles out there again by former Fed chiefs, former Fed governors, I should say, calling for 50. We've seen the rhetoric. We'll see what Chairman Powell has to say tomorrow, though, because that's the one that's going to matter the most. You jump over to where we are in terms of the market pricing. We going 25 or we going 50? We're right where we were yesterday. Remember I pulled this up? About a 2-to-1 odds right now that the market's thinking they're going to go 50. I find this very surprising. With the data, with everything, we get to find out tomorrow. We got a lot to talk about. We're going to come back. We're going to talk some Amazon. Yeah, Amazon and Intel partnering up. We'll talk about that when we get back. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got markets in positive territory. S&P's up by about 25 right now. Green across the board. You got Intel. You got Amazon. We're going to talk some Intel as well. They're teaming up. Amazon pushing 187 right now in the pre-market. Positive. You see a little bit of a pop. Your closed yesterday at 184.89. You jump over to Intel shares. They're getting a double banger, man. In terms of yesterday, news comes out that Biden administration, they are releasing some of the funds that they had been granted, but they had to earn those funds. Bloomberg, I was talking about this last week, right? That they hadn't actually hit some of the benchmarks that the government was looking for some of that funding to be freed up. But nonetheless, they've gotten about $3 billion. And they got 8.5 is the total number there. But they awarded Intel an additional $3 billion under that. Yeah, now let's get to the Amazon one, all right? So, Intel is going to make custom AI chip for Amazon. They're going to delay their German plant. I'm telling you, man, I've been giving Intel a lot of grief. And it's trading lower today. But I don't know, this 1-2 punch, they're getting more money from the government. They have a deal going on with Amazon. You can't choose a better partner than that. And you're getting into this equity at the same price that it was trading at in the year 1997. Imagine that. Good old Prince. Party like it's 1999. We get to party like it's 1997, man, with Intel. All the way back to 1997. You want to party like it's 1999? Go buy some Intel shares, man. Because in 1999, check it out, though, Intel was trading as high as, what did they get up to? $42. Amazing, right? You could have bought Intel in 1999, and you still are at 50% loss if you just held. Remarkable. But yes, so quite the news-driven front for Intel in the last 24 hours. I was reading this last night because they announced it right at the close. And yeah, so AWS is going to be a customer, okay? Now, what's interesting for Intel here is, okay, they're going to co-invest in a custom semiconductor for AI. I thought about it. I've been having conversations with Jacob all the time saying, man, these companies, they're spending so much money on AI computing with NVIDIA. It would make sense that they at least are having discussions to say, can we bring that in-house? Can we somehow make sure that we have control over that supply chain to make sure that we're not cut out of the market? You're seeing little twists of it here. They're going to keep going on NVIDIA. They're not going to lose their place, but there is going to be, and this is like one of those things that you may see coming down the line. And boy, multi-year, multi-billion-dollar framework. Okay, the work will rely on Intel's 18A process and advanced chip-making technology. And yeah, so you got, various quotes from whatever, but this is a very discerning customer who has a very sophisticated design capabilities. And I would agree in terms of if Amazon is partnering with them, then guess what? They're probably not going out of business right now, man. In that type of analysis, as in that is quite a confirmation in terms of what Intel is doing. Amazon believes in it. They're going to co-invest, so they're going to be a partner there. But yeah, so it's going to happen. So you get the CEO embarked on a bold comeback effort. Yeah, he's laying off workers nonetheless. What they're also going to do here, they're pausing 2 plants in Poland and Germany for a couple years, and another one in Malaysia is going to be completed, but they're not going to kick it into gear until they have the conditions to support it. The postponement of that Germany factory marks a setback for the EU semiconductor ambitions and is likely to, reignite controversy in Berlin over whether to allocate $11 billion in earmarked subsidies. I mean, the battle's on with government funding, man, to make this happen. But yeah, when you look at the context of a company right now that is only trading at a valuation even as of $92 billion. All right, if you're making chips for Amazon, you're going to start producing them. Yeah, and then you have the Intel's foundry operations, okay? They're going to further separate it from the rest of the company and become a wholly owned subsidiary. That move is aimed in part at convincing prospective customers, some of whom compete with Intel, that they're dealing with an independent supplier. They're going to be a wholly owned subsidiary, okay? And, there's a lot of talk about them maybe spinning that business off. They separated it about as far as they could without, separating it completely to spin it off. But yeah, that was a big one, man. Following the news that they got more money coming from the government, they got a deal going on with Amazon now. They're going to make chips that rely on that 18A process, advanced chip making technology, and Amazon's going to be a co-investor. And yeah, I found myself saying, you know what? Maybe I'll dabble a little bit with with Intel at about $20. And you're up another $1 today. Percentage-wise, that's going to be quite a pop. We'll see where they go. All right, on the flip side of that, we go to Apple. Now, Apple's going to be down about $1 in the pre-market. Quite a day for them yesterday, and I'm going to pile on them yet again today because, folks, I am the perfect target demographic. I am the perfect target demographic for the super cycle. And I found myself saying, I don't think I'm going to upgrade just yet. And that's what the data's saying. And then what have I been talking about? I've been talking about the iWatch. I love my iWatch. All right, don't have it on right now. Have it on a lot, especially walks, exercises, anything to that degree, right? And so this story comes out. Now, these were supposed to be 2 of the biggest products that they launched, all right? Now, this one is just from random. I'm just pulling up anecdotal stuff. But, folks, I agree with it. That's the problem. The Apple Watch Series 10 offers mostly minor upgrades, but faster charging is a big plus. Red flags all over this if this is what's going to do it. And I can tell you, folks, because I have an iWatch. And here's the kicker, okay? Now, what was intriguing, I started to see they're going to have a thinner, I think it's a thinner model of the watch. I mean, I like watches that are really thin, really tiny. I don't like those big clunky ones. Even the iWatch I have was the smaller version when it came out. I think it was the iWatch 6, the Apple Watch 6, and I think it was like 40 millimeters or 42. They had 2 sizes, and they vary sometimes, and it's going back 3 or 4 years now. But what's ridiculous here is that they talk about charging, okay? And I don't know who Todd Hazelton is, There's a bigger screen, faster charging, new polished titanium models, okay? But you bury the lead here when all that matters, folks, okay? I'm going to read you one line that matters, all right? First, I'm going to give you the promo part of this piece. The charging is great. The Series 10 has new coils under the back glass that charge it to 80% within 30 minutes. Wow, that's amazing, right? What if my Apple Watch is running low and I need a quick charge? I could get plenty of juice for the day ahead by plugging it in while reading a book or taking a shower. Okay, that's great, except for the fact that the Apple Watch has always held an 18-hour charge since the first one was released with the Series 1. I've never had a problem with my Apple Watch before, folks, okay? You charge it at night, it's ready in the morning, and it lasts all day. The battery doesn't matter. What is going on? We'll finish this conversation up. Apple taking some heat this morning. We'll be right back for the opening bell. Don't go away, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P up by about 0.3% right now, 20 points in the positive, trading at 57.19. All the markets in the green. Nasdaq 100, you're up by 123 points, 19,787. We check in on Apple shares, down about 0.3% right now. We check in on Amazon with their deal, up by 1.2% on the heels of that deal with Intel getting announced. You jump over to Intel. up by 3.4%. You trade a little bit lower coming into the opening bell. We'll see how Intel reacts this morning. You jump over to Tesla shares. Tesla gets a pop of the open, trading at 231. Meta up by 0.8% right now. Google shares up by 0.8% as well. Nvidia up by 1.7%. We jump to the other chip maker, AMD shares, trading right now up 0.7% at 153. We keep our eye on notes and bonds and gold. You got gold right now trading a little bit lower, but boy, still above 2,600, right? All things considered, you're trading at record prices territory any other time besides yesterday. As in Friday, we were at record prices. We hit 2,600 for the first time ever in gold on Friday. Pretty remarkable. You jump over to notes and bonds, a little bit of lower price and higher yield, but really, can you say that when you got the 10-year right now sitting at under 3.65? We're sitting right now at 3.63, we'll call it. 3.63%. We get some decent retail sales this morning. Before we jump around, yeah, look at that lift on Amazon. This is a good deal with Amazon and Intel for the two of them. Amazon up almost 2% right now, 188.24, and Intel shares up by about 4%. They do give back $1.50, which percentage-wise is a huge number. But on the heels of more money from the government, they ink a deal with Amazon. They got them as a co-investor, right? Amazon knows what they're doing, man. They know what they're doing. Now, let's jump to another article I had pulled up there for Amazon. So Amazon makes waves yesterday talking about the 5-day work week. You're back in the office all 5 days, right? Article from Bloomberg here saying it's not as strict as it sounds. Now, they put the memo out. How are they going to enforce it, nonetheless? Now, they may enforce it through layoffs, because part of what they put out there is that they got to trim in terms of what is happening as well. Yeah, so what they mention here, right, is that they're not going to be as rigid as 5 days a week you're in the office or you're fired, okay? This is just going to go back to basically how things were prior to COVID, okay? They're going to make exceptions for managers already approved for fully remote positions, all right? Flexibility, health concerns, other situations are also going to continue. Before the pandemic, it was not a given that folks could work remotely 2 days a week, and that will also be true moving forward. Our expectation is that people will be in the office outside of extenuating circumstances, okay? Whether you're talking about workers with sick kids, house emergencies, you need a day or two to finish some coding in an isolated area, yeah, go do your thing. All right, but if you just feel like working at home instead of coming into the office for no other reason, that's not going to fly anymore. And, you know, what they talk about here is you might have a memo, and this is just a Harvard Business School professor, saying, how do you enforce it now? How do you ensure people are going to follow your menu? Well, your memo, in terms of that memo stating you got to come back in the office 5 days a week. How do you enforce it now? The only real threat is less money or fired or something, right? I mean, that's where it all comes from to a certain degree. What I did find so intriguing is where we are with people back in the office. We're still at 50%. Look at that chart, right? We were at 100%, quote unquote, 92%, we'll call it, all right, is where we were pre-COVID, March 11th, 2020. 4.5 years ago. Can't believe it was that long ago. Can't believe we're coming up on 5 years post-COVID, but we are. And we are stuck at 50%, man. We're stuck. That's not going to change, okay? Now, it might change slightly, but the fact that we went from 100 to 50 over the period of 2 years and we're stuck there, whoo, those, and that's part of the reason why I think the Fed wants to cut too, right? You got all those mortgages for office buildings coming due, and rates are so high and the value of those is so low, it could be a problem. And yeah, you might have some quits in there, but that's what they're doing. They're going back to it. You know, you may have some of Amazon's top performers quit as a result of the new mandate, and shift back to stricter in-office rules could impact the company's ability to attract women, people of color. Nonetheless, it's happening, and you know, it's going to happen more often. And yeah, you know, when they put out that memo, I read it. You know, they want to be nimble, they want to be quick, they want to get rid of middle managers in there where there's too many layers, and they want people back in the office to get a little bit. They want to be the biggest startup in the world or something like that. It makes sense, man. It makes sense. So nonetheless, you get that deal going on, right? Amazon, they're bringing it back to the office. They're teaming up with Intel. They're going to be a co-investor. They're going to make some chips. Intel's going to part. I just like those two stocks together, man. The market, though, they don't like it as much as they did in the pre-market right now. Still up by 2.4% for Intel, and Amazon shares up by 1.6%. You jump over to Apple, down about 0.4%. You did spike a little bit below 215 right now. All right. What else do we got going on? Yeah, this one's interesting from the Journal. So, talking about junk fees, right? Everybody talks about them. Politicians love to talk about them. Spotting junk fees is getting easier. Avoiding them isn't. I mean, I only bring it up because it's just common knowledge, right? In terms of what's happening here is that, and they should put those because it's kind of borderline fraud, right? If you booked a hotel room for $1.19, and then you go there and upon staying you figure out that, oh, you didn't realize there was extra fees. I mean, they're just juicing you at the end where you have no ability to say no. But as long as they're putting them up front, it's your option as a consumer whether you want to pay them or not. It's just a different way for pricing things. Airlines have figured it out, okay? California passed 2 of the first bills to address transparent pricing. Honest pricing laws require businesses to list prices that include all mandatory fees. It would make sense because you're going to get greased with them later. That went into effect July 1st. What they do mention here is that those prices are reflected, okay? But guess what? No effect on prices whatsoever. They're shown to the consumer, but they're not bringing prices down at all right now. According to guidance from the California Attorney General, no effect on prices. And the hotel and short-term rental data providers who track prices say they see no direct line between the law and a reduction of the prices. They're just being listed, and consumers have no choice either to take it or not. Yeah, what else do they talk about in here? Yeah, they talked about airlines, rental cars. Now, this has always been the case for airlines. Major airlines already disclose all fees, okay? Rental car companies are facing new legal challenges. I mean, it's just a different way of pricing, and it's on the consumer is what's going to happen. You know, you're going to get these rules. The point here that I found myself thinking going through that is, you're going to get these rules. They're going to display the prices, but a lot of them already do display the prices, right? You have the resort fee that's now included, etc. That's shown to you, and it's just on the consumer to figure out whether they want to pay all those fees or not. It is an intriguing marketing model when you think about a room cost you $1.19, then you have a $35 parking fee, you have a $40 resort fee, and before you know it, you know, you're paying more in fees than you are for the room. But guess what? As long as they're disclosed up front, they're not really impacting consumer demand as the market remains hot. And you got the S&P up by 21 points right now. Yeah, market's on fire, man. Crude trading up a bit. We got a little bit of a pop, pushing highs for the week. 70.70 right now. We're up to 70.75 in the overnight session. Gold down about $7 right now. We check in on the dollar. Dollar index right now trading at 185. A little bit of a bid. Stay tuned, folks. We'll be right back. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Market's in positive territory. You got the S&Ps right now holding on to that 20-point gain. We're trading at 57.20. NASDAQ 100 up by 117 points, about 0.6%. Got the Dow giving back some of those gains. You trade a little bit lower on the open, still positive by about 0.2% or 88 points in the Russell, up by 0.6%. We got a question in the YouTube Tigers Den talking about that Russell, talking about the IWM. And our man Jeff is saying, I think it's going to fly after rate cuts. Well, it's possible. Quite the run when you look at where we are, where we've been. I'm going to pull up the IWM here. Even on the Russell, which has not quite made all-time highs, but you are bumping against a pretty critical area right now, right? You come into COVID on the Russell, the IWM, at about 170. So you are $50 above where you came into COVID. That's where we pulled back to. From the lows of last year, you trade from 162 to 218. And yeah, the only thing is we might have a little bit of a consolidation area in here, right? I mean, we just got back to this area that you traded in for the Russell for the entirety of 2021. That area is about 220. You know, 220 to 230. Your area on the Russell, you just touched that area in July, got down there, got up there, I should say. Again, in August, we're bumping up against that area. I mean, look at these tails on these months. Mammoth tails. You're talking about like 10% moves, right? In terms of the moves, the up, the down, the up, the down. We're back towards the up projection of 219 right now. You know, the only thing I will say is I agree in the context that if the Fed really cuts, the IWM should benefit to a certain degree, as all equities would, okay? But the tough part about this is, and this is what I think about in the market, and I hope you're listening, Jeff, because you can just take this one and you figure out whether you agree with it or not, but there are a dramatic amount of cuts priced into this market right now, and I see a much greater risk that the market has over-anticipated how quickly the cuts are coming, and we may see a repricing yet again. Doesn't mean the cuts are coming down the line. The Fed just doesn't need to be as quick, I think, with the data, where it lines up right now, and where they go. And if that happens, and we stay a little bit higher for longer, is that going to be a drag on some equities that have calculated in, right? That those cuts are coming, and I'm just not sure they're going to be coming as quickly as we think they're going to be cutting. Yeah. So I would look for that area, see how we trade through. You really blow through this consolidation area, though. And yeah, you know, you break decisively above 230 to 240, then watch out. You might get an explosion to the next leg up. And while we've had the Magnificent Seven carry this market higher, you might see that rotation. But we're into this critical area that we traded in for the better part of 2021, and we'll see how we trade into it. And we have so many rate cuts already priced into this market. I think there's a lot of risk right now that somehow it doesn't pan out in terms of the pace of the cuts and the severity of the cuts. And guess what, though? We get to find out in a little bit over 24 hours from right now what the chairman has to say about that. We're looking at about a 2-to-1 probability that the Fed goes 50 basis points. But what I find more intriguing is, tell me where we are in December and January. Where's the market pricing, right? By December, I mean, look at this, okay? This is the most startling right now when you go out in terms of where the market's pricing and where is the risk reward on this pricing. Right now, the market is basically pricing that there's only a 7% chance that they will go 25, 25, 25 over the next 3 meetings, okay? Because that's where they'd end up, at 4.5 to 4.75. There's only that's an outlier chance that they only have 3 cuts over the next 3 meetings. If you say they're going to go 50 somewhere in the next 3 meetings and then go 25, 25, that's only a 31% chance. There is a 64% chance that they are going to somehow have 5 to 6 quarter-point cuts over the next 3 meetings, tomorrow included. That's 50, 50, 50, folks, is the 19%, and 50, 25, 50 is the 43%. There's just a dramatic amount of cuts priced into this market right now. And you look at what are the chances that they don't go that fast, or what are the chances they actually have to go faster? Boy, if they have to go faster, then 6 cuts after over the next 3 meetings, that's 50, 50, 50. Right now, the market is already assigning a 20% probability that they're going 50, 50, 50 at the meeting tomorrow, November 7th, and December 18th. Whew. If they have to go faster than that, then that means we're in some real problems, right? Yeah. But we're going to get the first cut tomorrow, and I'm sure Chairman Powell is going to talk about the data coming down the line. But it is going to be intriguing to see whether he goes 25 or 50, and then how he defends that decision in the press conference to follow, right? You look at the Journal, of course, Fed in Focus. Nick Timmeroa, he's always got his ear to the Fed out there, and this is out there this morning. Fed prepares to lower rates with the size of the first cut in doubt. That's the whole conversation right now. They usually prefer to move in increments of a quarter point. This time, it's complicated. And that puts it lightly, right? The key issue for them at this meeting is their sense of the balance of risks, right? Now, you say that, and then you have, where's Dudley? There he is. Former President, Dallas Fed President Kaplan, not Dudley, excuse me, advocates for a half-point interest rate cut. So they're out there. Everyone's pushing their agenda. You got a lot of older Fed presidents out there making the case. But the only person that really controls things is Chairman Powell, and we're going to find out. But it's a 2-to-1 probability right now that they're going 50, which is remarkable. Yeah, look, they keep quoting it here, right? Markets, 2-to-1 probability that they're going 50. I don't know, folks. From a risk management point of view, he makes the case that 50 makes the most sense. If the group is split, a lot of this will depend, actually, on what Jay Powell personally thinks. That's how anything works, folks. All right, the data's there. We all see the same data to a certain degree, and he's just going to decide, and that's how it's going to work. And the market's trying to get him to decide 50. You have other voices like Kaplan saying they should go 50. Powell's the only one that's going to be in the history books, folks, about this era when he is the Federal Reserve Chairman. And the reason why I say that is because, yes, from a risk management point of view, 50 makes the most sense, right? Even if that's the case, because this is where I go down the rabbit hole of a little bit of game theory and just looking at the risk rewards from Chairman Powell's perspective, consider for one moment, there's greater risks in play there. You know what the biggest risk is to Chairman Powell and his legacy? Is that they cut too quick, inflation comes back, and they write about him, the man who couldn't squash inflation and acquiesced too early or something like that. That has to be in the back of his head. That is a risk to him. He wants to be certain. Remember that interview he did with 60 Minutes? He wants to get to the position where nobody is even thinking about inflation anymore. And boy, if you're going to start cutting at 50 at the time when we have retail sales beating, we got unemployment at 4.3, you have to consider the risks, and maybe they go 25. Going to be surprising if they go 50, and I can't wait to hear what they have to say, but we find out tomorrow. Don't go away, folks. We got one more segment. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets pulling back a bit. We're going to talk a little bit of football for the final segment here, but checking back in on the S&Ps right now, we're up by 15 points. A little bit of a give back. All the markets still in the positive, but a little bit of a rollover to 57.13 right now. We check in on some of the equities with action. Amazon, they're up by 1.7% right now. Intel holding on to some of the gains, but pulling back, up by about 2% right now. And Apple down about 0.3% right now at 215. And yeah, now, couple stories. Did you see Monday Night Football last night? Man, great game between the Falcons and the Eagles. Saquon Barkley, he's my fantasy running back. And I won my game this week. But boy, he dropped quite a pass on third down last night that basically allowed the Atlanta Falcons to come back down the line with their man, Kirk Cousins. Kirk Cousins has almost made $500 million in the NFL. He just signed, like a $200 million contract or something like that with the Falcons, even though they drafted a quarterback in the 7th or 8th. Nonetheless, the remarkable part here when we talk some money, we're talking finance, okay? And what got me going is a journal article talking about Tua has a life decision to make. He's the Dolphins quarterback, got another concussion last week if you watched it, okay? This is out yesterday morning, but we didn't talk about it. And what's remarkable here is that he had 2 concussions in 2022, all right? And that made tons of headlines because he got them like back-to-back weeks. He wasn't taken out of the game the first time. A lot of outright displeasure with the way maybe that was handled. He came back too early, got a severe concussion. Nonetheless, he comes back last year, has an absolute banner year, signs a deal in the offseason to the tune of about $200 million. And what's remarkable is, and that's right, he's 26 years old. Now, what happens here is that the injury guarantee is only going to come into play if Tua is not medically cleared to return to the field. Well, that can happen, folks, okay? If anybody's seen, I mean, you think the Dolphins are going to go into court and argue that he needs to come back and play football after what happened, but what the Dolphins have is they have insurance. Now, this makes more sense because say, how do you sign a guy like that to $200 million, a bunch of it guaranteed? You know he has maybe a concussion issue, and they have a $50 million insurance policy. But you're going to see these discussions take place more often. You know why? Because why wouldn't you? At 26 years old. Oh, that's the end of the program, folks.